Welcome back. U.S. stocks were under pressure yesterday. They could be under pressure again today, but the story in April has been fairly positive. As you can see in that graph, there's been a significant move up in the S&P 500 since early and mid-April. Let's talk to an expert in U.S. equities. He's our guest right now, and a familiar face to viewers of this channel, Reid, president of Goodreid Investment Counsel. Gordon, thanks for coming in.
Hi, Paul.
So I know you're a long-term investor. You're not a trader, but what do you make of these big moves we've seen in the S&P 500, these big positive moves we've seen during April?
Yeah, hasn't been a big surprise to us at Goodreid. This is really the definition of an event-driven market. Unlike economically driven, systemic-driven markets, event-driven markets tend to resolve themselves quite quickly. And what we saw was that there was a huge drawdown in April on the fears of the Trump tariff situation. And once it became clear that it might not completely stick, that there might be some wiggle room and that he might back off a little bit, markets started to digest and, of course, recovered. And we've seen that in the past. The most recent event-driven situation that we're all familiar with, of course, was 5 years ago at the pandemic, when markets, of course, were very scared, moved down dramatically, but recovered once a solution was in sight.
You say in some recent commentary that I assume you've shared with your clients, the next 4 years are going to be more volatile than normal because the source of the volatility is Donald Trump, who's impossible to predict. What does that mean to investors? A 4-year period of greater than typical volatility?
Yeah, we actually, in our Goodreid Gauge, our commentary to clients at December said, buckle up, because the next 4 years are going to be much more volatile than we've been used to. What that means is that we have to make sure that we have the risk tolerance to be able to maintain our stance through the poor periods. In April, we saw a lot of investors quite frightened. And I think probably out there, a lot of them made moves that they now regret. Yeah. Within Goodreid, we didn't have a lot of that because we prepared our clients for this type of situation. I think the lesson here is that the tariff situation was simply the trigger. The cause of the problem, the root of the problem, is Donald Trump and his policies and his style. He's a chaotic, disruptive manager, and that shows in the markets. So as an investor, I think we have to take this point in time to very seriously look at our investment stance, our asset mix, what we have devoted to different market jurisdictions, different asset classes, bonds, stock splits, and ask ourselves a very serious question. Can we tolerate more periods of disruption and volatility, perhaps even greater than the one we went through in April? And if the answer is no, then we should very quickly do a review, call your advisor, make sure that action is on the front burner, and do something. Don't just talk about it, don't just think about it, but actually make changes that will allow you to be a good investor through a period of disruption. And I want to be clear, I'm in no way suggesting that investors take radical action and time the market and try to get out in front and guess. That's not what we at Goodreid look at. That's not our style. We think that you have to get through periods of rough waters to eventually get to a point where you'll be better off than if you were a completely passive investor or an investor in non-risk assets such as treasuries.
Do you advise, or are you contemplating a dialing down of U.S. equity market exposure in client portfolios in favor, for instance, of Canadian or non-North American stocks?
No, we're not, but, always a but. We have found over the years that clients have they favor U.S. equities because the U.S. market has outperformed the Canadian market year after year after year. And it's natural, it's human nature, to want to gravitate to what has rewarded us as investors, and that has been the U.S. side. So for well over a year, our portfolio managers have been counseling clients to take that U.S. exposure, dial it back as a percentage of their total to target levels in favor of the Canadian market. And we did a lot of a lot of trading through January and February to put things in their proper place.
What do you make of this drumbeat of announcements we're getting from S&P 500 companies saying the tariffs are hurting our business, our sales, and in particular our profit will be hurt by this? Ford is the most recent.
I think it's constructive because it's just one interest group that's beating the drum. We're also hearing that or anecdotally hearing that out of governors' offices and House of Representatives and state senators. You know, it's not a positive thing. I think there's a very, very small group that really believe that tariffs are a positive way to go. I think that Trump and his group really think that the big game is that tariffs will be a producer of funds for the U.S. government, and that he's going to, quote unquote, reward investors or people with lower tax rates. Everybody I talk to, and I have some experience in economics, will tell you that that's a very, very regressive way of operating an income. What it does is it hurts the smaller, lower income groups and the middle class in favor of the wealthy, and that I think most Canadians would agree is not a constructive way to operate an economy.
Let's finish. What are your views on the U.S. auto sector? Both Ford and GM have warned quite severely recently. What's your view on those two stocks and other peer companies in the U.S. auto sector?
Yeah, for disclosure, we own GM in our U.S. large cap portfolio. These are tough times. We saw them revise. GM, that is, revised their numbers, and Ford, I assume, just did it this morning. I didn't have time to look at it before I came over. But we were actually fairly pleased that the impact on GM wasn't as negative as it might have been. And I think that when you come right down to it, where do we go from here forward in terms of how the auto sector sort of fits into the whole tariff narrative? And I think that probably the news flow will be positive as opposed to negative, which it has been over the last number of weeks.
Gordon, thanks a lot for coming in.
Sure, Paul. Thank you.
Gordon Reid, president of Goodreid Investment Counsel. Coming up,